Morning, Steve Ray in Chicago with the morning grain comments. Grains are lower overnight. The first headline came out that Interfax said that Russia will open a corridor to allow for Ukraine exports of humanitarian food. Later, the Russians clarified that, was saying opening up that corridor would be have to have some kind of reduction in Russian sanctions. The Deputy Defense Minister of Russia also said that the Mariupol port is open, but many people doubt there will be any shipments out of there because of the destruction of the elevators there. So the market traded lower, 10 cents in the corn, 25 cents in the wheat, down 6 cents in the beans because of these headlines. We also noted that from a weather standpoint, we're going to see wet weather across the Midwest. It's gloomy and showery here in Chicago today, and that we'll see more rain up in the northern plains and eastern part of the prairies. Europe still mostly dry, especially in France, and seeing a few showers in northeast Argentina, but the rest of Argentina is dry, and dry conditions in Brazil could have impacted the second corn crop, where Brazil September futures are trading at $8.95 versus U.S. futures of $7.63. Yesterday, corn saw funds sell about 15,000 contracts after there was word that China changed their restrictions on Brazil corn quality, and they're going to import some corn from Brazil. I think this is all part of the shifting of buying and selling based on the Ukraine war and the fact that up till today, there are no exports going out of Ukraine, especially corn, to China. I don't think the numbers have changed that much. I think that final U.S. bean exports will be higher than USDA numbers. I think that the corn exports will be higher, especially considering that census is 266 million bushels higher in U.S. Corn exports today than the inspections. We'll be watching the ethanol data today. There is some concern when stock markets as low as they are because of the inflation, because of higher interest rates, because of lower consumer spending. We did note that new home sales dropped the biggest in 9 years. We also noticed that the U.S. Composite Purchase Index for May was down to 53.8 versus 56.5 in April, and that's the weakest growth in that index in 4 months. So I think the main thing here is that I think wheat supply long term is going to be down versus demand. I think that we might lose a few corn acres because of the lack of plantings in the northern Midwest, and heavily dependent upon a 177 corn yield to satisfy demand. But still, carryout could go down with that yield. And I think starting August, soybean demand out of the U.S. will be record high. It is interesting that the Ensemble GFS American model is trying to put a ridge of high pressure in the eastern U.S. Midwest next week. We don't think this really changes any of the first June weather forecasts that we're seeing here in May. And it really doesn't change the opportunity that we could see some ridging in the Western Corn Belt later this summer. As always, these are my thoughts, not those of ADM, and have a good trading day.